What if one of the world's oldest precious metals, used in ancient empires, global industries, and modern defense systems, has been consistently mispriced for over a century? Silver has officially crossed the $40 per ounce mark for the first time in 14 years. That may not sound earth-shattering at first, but when you understand what's driving the surge and how historically undervalued silver really is compared to gold, you'll realize this quiet rally could be one of the biggest missed opportunities in modern investing. Do you think silver still has room to grow? Yes or no? Drop your thoughts in the comments below. In today's episode of Epoch Report, we're diving deep into why silver is breaking out of its long-term slump, what threats are looming over its future supply, and most importantly, why it might still be trading at just a fraction of its real potential. By the end of this story, you'll understand how silver came to be seen as just an industrial metal, why the US government is now urgently reclassifying it as a critical mineral, and whether we're standing at the start of a once-in-a-generation repricing. Stay with us, because what's buried at the end of this video could shift your outlook on silver and your portfolio forever. For those of us tracking silver closely, this moment has been a long time coming. After more than a decade of stagnation, the price of silver has finally surged past $40 an ounce. The last time we saw these levels was in the early 2010s, but since then, silver has been stuck in a frustrating cycle of suppression and low volatility. Now that cycle may be cracking. Over the years, here at Epoch Report, we've emphasized what we call the 3 pillars of wealth protection: gold, silver, and Bitcoin. These aren't just speculative plays. They are, in our view, long-term stores of value, each with its own role in shielding wealth against the erosion of fiat currencies and unstable markets. Gold and silver have always been our foundation. Bitcoin joined the rotation more recently. And here's something interesting. They tend to rise in turns. When gold surges, silver often follows. When Bitcoin retreats, precious metals recover. It's like a relay race, where each asset hands off the momentum. That's why we've never encouraged all-in bets based on market timing. We don't pretend to predict market crashes or spikes. Instead, we believe in disciplined, diversified asset allocation, constantly reviewing and rebalancing our portfolios according to long-term ratios, not momentary emotions. So now that silver is on the move again, let's examine why. Recently, a compelling trigger emerged. The U.S. Department of the Interior has proposed adding silver to the federal list of critical minerals. This is more than policy, it's a signal. The designation would mark silver as a mineral essential to the U.S. economy and national security, recognizing growing demand and potential choke points in supply chains. Why now? Because silver isn't just pretty metal. Its industrial role is exploding. Silver boasts the highest electrical conductivity of any element, making it indispensable in electronics, data centers, and advanced computing components. But more importantly, about half of global silver demand now comes from one sector: solar energy. That's right, silver is at the core of photovoltaic solar panel technology. As the world pushes into renewable energy systems, silver demand isn't just rising, it's surging. Let's not forget military demand. While exact figures are classified, silver is widely used in weapon systems, satellite components, and communication hardware. The opaque nature of defense procurement only hints at how much silver the sector consumes, but you can assume it's substantial. One more important data point. According to industry analysis, 60% of global silver demand today stems from industrial use. In 2024, industrial silver consumption reached an all-time high, and yet supply has failed to keep up. How bad is the shortfall? Silver has now experienced 4 straight years of structural supply deficits. In 2024, we saw a 148.9 million ounce demand gap. Over 4 years, that cumulative shortfall has ballooned to nearly 678 million ounces, and it's not over. New forecasts suggest this imbalance will continue into 2025, potentially worsening. If you're still here, it's probably because you see what many others overlook. You're not just chasing headlines, you're seeking insight. So make sure you're subscribed to Epoch Report and hit the bell. We give you financial intelligence the mainstream won't touch. It's 10 minutes a day with us, and you'll start seeing the shifts that matter before they're priced in. Now here's where things get jaw-dropping. Renowned precious metals analyst Mike Maloney recently pointed out a staggering contrast. The entire historical production of silver every ounce, Evermind is estimated to have a total market value of roughly $2.1 trillion. To put that number in perspective, Amazon, one single company, is worth $2.3 trillion on its own. Think about that. Tech retailer has a greater market value than every molecule of silver removed from the earth since the dawn of civilization. And this isn't just a theoretical comparison. The irony is that massive corporations like Amazon rely heavily on silver in their infrastructure data servers. Renewable energy initiatives, logistics tech, all of it taps into silver. So how can something so fundamentally required be treated as a side note in global finance? Part of the answer lies in where silver comes from. Roughly half of the world's silver supply doesn't come from dedicated silver mines. Instead, it's extracted as a byproduct, typically while mining for copper, zinc, or lead. This means that if demand falls in those base metals, silver production paradoxically drops, even when its price is rising. Worse still, because silver isn't the primary product. Higher silver prices alone may not incentivize ramped-up production. There's a fundamental choke point baked into the supply mechanism. Let's zoom out and view this from a historical lens. Gold and silver have long traded in tandem. For centuries, a relatively stable ratio governed their relationship. Around 1200 AD in England, 1 ounce of gold could buy roughly 11 ounces of silver. In 1792, under the U.S. Monetary Act backed by George Washington, the fixed ratio was 1:15. That ratio endured for generations. But today, the gold-to-silver ratio has exploded. At the time of recording, gold is trading roughly at $3,498 per ounce. While silver sits at about $40.88 per ounce, that puts the current ratio at about 1 to 85.5. What does this mean? It means that silver is extremely undervalued, relative to gold, arguably more than at any point in modern history. If gold stays constant and that historical ratio were ever to revert to a 1:15 balance, silver's target price would be $233 per ounce. That's a potential 5.7x return without gold needing to move at all. Yes, some argue that silver's monetary role has diminished in the modern world, that it's no longer treated as a reserve asset like gold. But here's the catch. Silver's industrial utility is now undeniable. With AI, robotics, electric vehicles, and green energy all surging, silver is becoming even more essential than it was in past centuries. So maybe the traditional role of silver is shifting, but not in a way that weakens its value. In fact, the opposite may be true. Naturally, this raises a practical question. How do you actually invest in silver? For those living in financial hubs like Hong Kong or New York, there are many reputable bullion dealers offering physical silver. But there's one big caveat: transaction spreads. Unlike gold, the buying and selling price of physical silver can differ by 5 to 10%. Remember, if you buy at $40 per ounce, you might only be able to resell at $36 or $38 per ounce. And for collectible coins or ornate silver rounds, that spread can exceed 10%. So attempting to flip physical silver for a quick buck often doesn't work. The key here is long-term holding. Personally, I began accumulating silver back in 2013. Prices had crashed from nearly $1.50 an ounce to below $15, and that's when I started stacking. I've never sold an ounce since. My recommendation: skip the small valuation coins and go for bulk silver bars to an ounce or 100-ounce varieties. The larger the bar, the lower the premium over spot price. In some cases, you can find spreads as narrow as $2 per ounce. But be prepared, 100 ounces of silver weighs around 4 kilograms. If you're planning large-scale storage at home, check the floor supports. There are creative ways to store silver discreetly. Some people integrate it into wall cavities or the foundations of homes hidden in plain sight, but safe from theft and overregulation. I want to hear what you think. Is silver finally catching up to its true value? Or is this just another spike in a volatile cycle? Is the supply crunch real or overblown? Let us know in the comments below. Do you think silver could hit $233 an ounce in our lifetime? Yes or no? If this episode gave you a new way to see the silver market, don't just like the videos, subscribe, and turn on notifications. At Epoch Report, the timing of insight is everything. Markets move fast. But with just 10 minutes a day, You'll spot the signs of change that most investors miss until it's too late. We'll see you in the next report. Until then, stay critical, stay informed.